when I purchased my house, I was shunned. My friends um, barely celebrating me because they thought the house was ugly. Did you think I care? No, I brought a house with orange carpet, handicap railings. I didn't care. You know what? Because I saw a diamond. I said, you know what? These rooms are big. These are some big rooms. You know what? Not only is my master bedroom big, but all the rooms are big. My kids' room are big. Not only that, they have walk-in closets. So yeah, I brought an older house because the newer houses they were building with small rooms. And now I was like, now I'll take the house with the orange carpet and the handicap railings. And yeah, I'll take that. And the linoleum floors. Yeah, I'll take it. I'll take it. Sure. I had some cash and I could just, redo it how I wanted to redo it. And that's what I would still have the value. The value is in the space. The value is being able to walk in the closets. The value is having a nice kitchen and bathroom for the ladies. We love a nice bathroom and a love kitchen and a nice kitchen. So it's all about being able to accept the real value. The value is not in the paint. The value is not in the lawn. The value is simply where it is located. What is it made out of? How much space do you have? How much um how much yard how big is your lot? So what school zone is it in? All that stuff has oh, and not only that, does the neighborhood consist of renters or buyers? Is it more buyers than renters? That's something you want to ask yourself too. All right. So, why people focus on doubling up on their mortgage, there's another side to that because once you give your money to the bank, you never see that money again. It's gone and it's gone forever. Done deal. It's gone. But the same way that they're looking at the interest compounding on them and they're paying out so much, paying out the 5%, the 6% over a long stretch of years. But that same person does not have any money that's actually working for them. So imagine if you're looking at how that money is working for the bank, but then you don't have a setup where the money is working for you. Just like the bank is established as a business, each individual in this group that is watching this live, you are also a business. Doesn't matter if you have an LLC, none of that matters. You were born a business. You have a social security number. That is your business number. So what we have to do is start acting like we are a business. So if you don't walk like you are a business, then another business will control you, will tell you what to do, will dictate to you. But when you start moving like a business, making decisions like a business, and the world is going to react back to you. Okay? So you are a business. So the same way that we can look and see how this interest is accumulating on us, it's compounding on us, and wow, you know, over all these years I'm going to have to pay all this. You looking at in the long run what you're going to have to pay. But are you looking at in the long run that if you pay yourself what you're going to have? So either you can double up and get out of this debt and be free. Or you can say, you know what, instead of me putting all of this extra doubling up trying to get out of this debt so I can classify myself as free, because you're still not going to be free. You're still going to have land taxes. You know, that's still going to be there. So then you can look at, okay, if I accumulate this over here, if I put this in the right type of an account, then I also can be accumulating my value. So while you're looking over here saying, well, that the bank is going to get an additional $100,000, well, go look on your side and say, well, dang, I'm gonna have an extra $250,000. Is it guaranteed that they're going to get that? Most likely, because the bank protects itself. And now I'm going to get into how the bank protects itself and then how you can protect yourself. The bank protects itself. They say, well, if you don't have 20% to put down, then you know what? You're high risk. And since you're high risk, you know what? We're going to demand that you get PMI insurance on your investment. And we're going to demand that you pay for it, but we're going to be the beneficiaries of it. It's not going to be any benefit to you at all. So PMI is what we would call a mortgage protection insurance but it's for the bank. So it protects the bank and says, you know what? Let me fix my little hair. It says if if you don't pay your mortgage, and if we foreclose on you, two things is going to happen. We're going to get your home, and then we're also going to get paid from the policy that you were paying. So, we're going to get paid twice on that home. So, yeah. So that thing that you see, like the PMI thing, that's what that is all about. But then there is also a product called mortgage protection for the consumer that you would actually pay for. And this protects you from your home foreclosing because you can be paying for your home for 29 years, right? And something happens, it only takes 90 days for the bank to initiate a foreclosure. It don't care how close you were to the deed. Either you got the deed or you don't. So that's the thing. Either you got it or you don't. So um, you have all these things like with insurance because I am an agency owner, insurance agency owner. So you have um, you have life insurance, you have all type of stuff, but there's also a insurance called mortgage protection that is specifically for mortgages. As your mortgage loan amount decreases, the coverage for your insurance decreases as well, and it's specifically designed for if you were ever to get unemployed, if any income that you had coming in stopped, that policy would start paying in. And this is specifically designed to make sure your family and to make sure you get the deed to your home. So I hope this has been helpful. And I just wanted to share, at least three different ways to address going through the process of going from the mortgage payer to deed owner. So I'm going to, if you want more information, or you say, you know what, I need some mortgage protection. Or if you say, you know what, I'm in trouble right now. My home is in the process of foreclosure. I own a economic consulting firm that we partner with. We have different partners, attorneys, accountants, all of that actually specialize in helping people save their homes. So if that's you, you would click that link, the link that I'm about to put up, and you would find foreclosure defense. And if you are still in good standing with your mortgage, I would definitely say, get the mortgage protection insurance specifically designed for getting you to the deed.